Hey, everybody. Welcome back to another episode of the Growth Capital Podcast. I'm your host, Justin Dixon, and today we've got Andy Jones, Managing Director and Founder at Private Equity Info. It is a database that tracks all of the M&A activity going on, buy, sell, people moving from portco to portco. And so we dive in pretty deeply into the data of how he actually finds and maintains and updates the data in a much more kind of human way than just kind of using AI scrapers like some other platforms do. We also start the conversation out with a little bit more about him and how he got into founding this business. He started his career out as an engineer, then moved into investment banking, and then obviously founded Private Equity Info. So super interesting. If you want to learn about data and how to track data in the M&A world, really interesting conversation. So let's get Andy on the pod. Interested in hearing conversations with private equity leaders, CEOs of private equity-backed companies, and startup entrepreneurs where they share their stories about their career journeys, starting, investing in, and scaling successful businesses, and the important role that having the right talent plays in building a successful business, then you are in the right place. Welcome back to another episode of the Growth Capital Podcast. Here's your host, Justin Dixon. All right, Andy, man, thank you for being on the podcast. Good to see you.
You too. Thanks for having me.
Yeah, no, well, let's jump right in. Maybe give the audience a little bit of an overview of who you are, where you are, and what you're up to right now.
Oh, wow. How far back do we want to go? I'll be very brief. I was originally an engineer. Then after doing an undergraduate and master's degree in engineering and working as an engineer for a while in GE, decided I'd rather do finance. And so I did my MBA. It's been a long time ago now, but worked as an investment banker for a while before founding Private Equity Info in 2005. So this is year 20. This is actually year 21 now of running Private Equity Info. And we track the various players and people and firms involved in M&A. So it's an online research database.
And how we'll dig into the kind of how it got started, but how does Private Equity Info work? Because there are other platforms out there that tout they track all this stuff. You got your Crunchbases and all this stuff in the world, but like what's kind of different, unique, interesting about PE Info, and is it a competitor like a Crunchbase or a Seamless AI or whatever these other platforms are?
Yeah, so every one of the information service providers in our space has a little bit of different angle and different strengths and weaknesses. One of the things that we pride ourselves on is the quality of data. Our data quality is just fantastic. We definitely overspend in that area, but we think it's important. We're more affordable than some of the other solutions. And the other thing is service. When people call or email us, we're very responsive and we know what we're talking about and happy to help.
Got it. So how did it all start? So you obviously, it seems like you've had a few different careers here, starting out as an engineer and then shifting into kind of being an investment banker. How did Private Equity Info kind of come about? Because obviously you founded it, 26-ish years ago.
So it was an accident, really. I had this idea and I said, this is 2004. Somebody needs to put together a database of all the potential financial buyers, so that all the investment bankers could use it. And I was looking for that solution, didn't exist. At the time, I said, well, someone's got to be that guy. Right? So I created it, and it was more just like, it wasn't even minimal viable product, right? Like no one even said MVP back in those days, but it probably wasn't even that. But launched just something I created for myself to use in my work as an investment banker and wound up seeing significant traffic. I launched it just for other people to use and then realized I might be onto something here. And so it's a classic entrepreneurial story. When you solve your own problems, other people have those same problems and it's something that becomes a product. And that's what happened. So it had some legs to it, launched it in January of 2005 and literally had my first customer that same day.
Wow. And so you were in investment banking as an investment banker, and this is probably pre like LinkedIn and all these other kind of networking services.
YouTube
so
isn't even around yet.
Got it. Okay, fair enough. And so you kind of And I guess even private equity and investment banks didn't have their own internal research teams that were kind of pulling this information together, or was that information just not robust enough for what you needed or what you thought was needed?
Well, certainly they did, and very few firms had an internal database. A
Okay.
lot of firms had their own, we'll say, Rolodex, which is what we used to call a CRM.
Yeah.
And every firm had their own set of contacts and people they knew, but there was a large swath of people and firms they didn't know. And so I said, well, why don't we just all put our Rolodexes together and create one master database of all the firms and people that are interesting to everybody to contact, and then make it easy to search across. And it sounds really obvious in hindsight, but it didn't exist at the time. And so one of the key insights I had was the ability to keyword search the portfolio companies that are owned by private equity firms. And the reason why that's important, excuse me, the reason why that's important is because the single best indicator of a private equity firm's interest in, say, your client's company, if you're an investment banker, is that they've already made a very similar investment like your client. If you choose keywords and phrases that describe your client and say, well, who already owns companies like this one? That's a great set of, leads for you to go after potential buyers. And that was, it sounds really obvious now, but at the time it was slightly innovative, we'll say.
Well, I feel like everything that's obvious now was innovative at its infancy, right? Like, so you've got to your point, somebody's got to be the person, the guy, the gal that goes out and actually builds and does this. So I'm guessing, there weren't AI scrapers and, all this stuff that existed back then. So how did you, as a person, as a one-man band, how did you kind of start to build your database, while also, doing your day job? Like, what was the kind of process to go through and get all this data into a system?
It's a grind. Yeah. Did it myself.
So brute force.
Brute force version 1, Andy. Company of one. Yeah, and I think that's the way a lot of things start, right? You certainly, you don't know what has legs to it until you start, and so you build the first version and see where you're at and get the reaction from the marketplace.
Yeah. And so you launched and you got your first customer same day, which is awesome. Validation that what you're doing actually, is useful for at least one other person. So that's great. How did the kind of 2.0 version kind of start to evolve? So obviously you're a solo founder. You've got this business that you founded, but also I'm assuming you're still working at an investment bank. At what point did you kind of make that split from being like, okay, I'm going to go full bore into private equity info and,
Well, there's a crossover point where you begin to make more money part-time than you are full-time. And so I think it was in 07, Q3, Q4 of 07, I started, just full-time. Maybe it was early 08. It's been a while. It's getting fuzzy.
Yeah, right.
On the dates. But at the end of the day, I don't know that there was exactly a 2.0. It's been a continuous evolution. And so we might be on 1.997 right now.
Right.
Just tons of continuous innovations. And prior to starting a company, I used to think you had to have a great, brilliant idea. And then you learn, actually, you need to start with something, an idea, put it in the marketplace, and then get feedback. And then your customers will tell you what they actually wanted. And then go do those things. And so the product shape shifts over time to become what your customers are asking for.
Yeah, it's a continuous feedback loop, right? Because you put something out in the market and it's perfect today, but then somebody says, well, hey, what about this? And then you've got to edit it or iterate it. And, some people are very rigid. Founders can be, a little bit bossy or control freaks. And so sometimes they think they know what's best. Whereas you were like, let me just let the customers, my audience kind of tell me what they want versus me thinking that I know what they want. Is that kind of how you...
That's where our best ideas always come from. In fact, I developed a rule of 3. If I get the same idea from 3 different people who are independent of each other, either we should do it because it just should exist in the product because there's demand for it, or there's money to be made through a new feature that you could upcharge for or have a higher price point for. So rule of 3 is if you keep getting asked for something in a short duration, like let's say in a couple of weeks, 3 people just randomly say this, this is in the early days. Like that informs your product development. And what's interesting about it is you get a lot of customer satisfaction and loyalty and brand loyalty if someone suggests something and a few weeks later it exists. Because your customers felt like they were partly co-creators in the development of the product. And it's kind of cool.
Yeah, I know I've used a lot of platforms, and you always kind of say, hey, wouldn't it be cool if this happened or this happened? And then it never, like, it's on the roadmap, right? Yeah, it's on the product roadmap for 2028 or whatever it is. And it's like, cool, I'll not be a customer then, because this is, in my mind, it's an obvious kind of edit or update or whatever. And so I appreciate that your firm is, as you're starting out, was kind of, put a product out, edit, put a product out, get some feedback, and see how it goes.
Trying to be super nimble. That is a strategic advantage for sure.
And then as you started to grow the business and this 07, 08 time frame when you said, hey, I'm going to kind of fully focus on this and leave the security of a corporate environment behind, how did you kind of go from then to now? Like, what's been other than product evolution, and it seems like the platform is very consistent, but obviously with updates and feedback, but how did you go about building a business around a product?
If I were to go way back, it's kind of interesting. This is maybe for posterity, but it wasn't entirely clear to me early on that people would be willing to put their credit cards online to subscribe online, right? That's how early this was, right?
Yeah. I mean, there wasn't a lot of online payment applications. Probably PayPal was.
It kind of seemed like maybe you're going to get scammed, right?
Yeah.
I don't know if I would have put my credit card online at that time, but it turns out people were willing, and of course their security got better on the internet and all. But the product evolved over time. Just I don't know if I have a good answer for that question. It's really just scaling out the data that we offered, scaling out the tools upon which you can interact with that data, and just trying to do a great job of building a user interface that is very, very simple to use.
Yeah.
It turns out it's really difficult to make things simple. And so we put a lot of time and energy into that. And I think that comes across in our platform.
And so now that you're, kind of the founder of this business, and it's been around for a number of years, and obviously you've evolved the team and the data, how have you seen yourself? Because I'm always curious about kind of founders' kind of evolution, right? Because a lot of people are entrepreneur, or they're a W-2 employee, whether regardless of what career they're in. And then at some point they become a founder, and then at some point then they become a business owner and leader, and that, kind of evolves, and you have to kind of adjust your mindset, adjust who you talk to, and be careful where you get feedback from. So, over the last 20-ish years, how have you kind of evolved yourself? Has Andy evolved kind of as a leader and a business owner now that you've kind of been around and doing this for a number of years?
That's a good question. There's a lot of angles to that. How do I want to frame this answer? A couple ways. One is, personally, early on, I recognized, the first 5, 6, 7, 8 years, every year you have to elevate your title, right? There's some things that you shouldn't be doing that you used to do because it's not the highest and best value add for your time. Right? So there's that. And you hire, great people to do those things. From a cultural perspective, this is something I've put a lot of time and energy into. And I've read very widely on this subject and really tried to absorb from my own personal experience of working at other companies and just other founders' experience, and trying to really shape our corporate culture. It's important because we're in 3 different continents and different cultures, different languages. And so really I've boiled it down into 3 points in terms of this is aspirationally the 3 things that I want our company to have the vibe of. And number 1 is we hire adults and then we treat them that way. Super important. And that's not always the case at firms I've worked for in the past. 2 is we manage projects. We work with people. We don't manage people. And I find if we are managing people, we've made a bad hire. So we're really looking for those A players that manage themselves and get stuff done. and tell us what they do rather than ask for permission to do things. And the worst is, what should I do next? Right? You should probably figure that out. You're an adult. If you understand the strategy and we've communicated it well, you can figure that out. So that's the second thing. And then the third thing is we work really hard. We do. But our personal lives always take priority. And so this element of, go is important and be entrepreneurial and go fast, but sometimes life happens and you need to attend to that. And that is the most important thing. So those are the three philosophies that we try to operate by.
I really like that, and I want to kind of unpack that just a little bit more because we live in a global economy. We live in a world post kind of pandemic where people are still trying to figure out the right mix of fully remote, fully in office, hybrid. How do we leverage talent across the globe? And some of them are in lower cost places that they live, and so we can bring in good talent that saves us money over local talent. So how have you kind of, other than the three things, like maybe how do you evaluate people during the interview process when you're talking about maybe the managed projects, not people? So how do you find and suss out if somebody has the ability to be given some type of a directive or some type of a strategic vision of here's where we're driving, and for them to not be given each road or each milestone on that road, that they can actually then say, okay, cool, here's what I need to do step one. Once I do that, then it's step two. And how do you kind of assess that during that, the initial process?
While you can get a sense of it by talking to people in interviews and doing multiple interviews, I don't think you can get a great assessment of it. And so depends on the position we're hiring for, right? So let's take the example of maybe someone on our research team that's heavily involved in the data and keeping the database updated and that sort of thing. So offshore talent.
Mm-hmm.
We give them projects to do before we hire them, right? And so you see how they do those projects, and then you see the questions they ask for those projects. You see how they communicate during it. And the most important thing is not so much that they got the project number one exactly correct, but they heard our feedback from project number one and did project number two with course corrections. Right. So so
it's almost like a try before you buy kind of scenario where you during the interview process or some type of like interim period where you're like, hey, we're going to give you and pay you, or however you structure it, we're going to give you some opportunities to show us what you've got, and then that'll inform if we make the ending hire decision.
Right. Yeah. It's an interview process, but we do pay for the projects.
Yeah.
We pay them for their time. And I think that's important, right? It's just respectful to pay people for their time. If you're going beyond just like a normal, 30-minute interview or an hour-long interview or whatever, you're asking someone to do some work for you, you pay them. Now,
right.
That said, the projects that we give them, we already know the answers to. It's not work we need to have done, right?
You're right.
Yeah. But
that's actually also a good thing where what great looks like in the project, but then also to your point, I think you said like you're trying to see how they interact with you and the team, because that's the ultimate goal, right? If you are just trying to get them to achieve a standard or some type of outcome, you can hire anybody and tell them, I want you to do this, and they can do that. But I think to your point about managing people or projects, not people, you want to know how they're going to, actually interact during that feedback loop of that whole process.
I mean, certainly you get a good sense, a great sense of how people think and their competency and capabilities by how they move from project one to project two and the questions they ask. We all know the person that asks too many questions. And we all know the person that asks too few questions. And you know the difference pretty quickly.
Mm-hmm.
Like you ask too many questions, that starts to lean like we're going to have to manage this person instead of the project. Right. And so if they ask too few questions, either they're a rock star and just get it done perfectly the first time, and that can happen, and that's fine, or they just don't have the right sense of the appropriate level of communications. And so it helps tease those things out. But there are people who can really just understand it immediately and just rock it out, and like, okay, perfect. even better.
And that's like, hire, done, let's move
Yeah,
on.
no
Bring you in. That's
flexibility
great.
required.
That's right. That's exactly right. And those are the ones that you want to find. And if you could replicate that model, it would be perfect. Um, I'm kind of curious, kind of lasting on kind of the platform. I think for a minute, and we can kind of dig into some more macro stuff here. How do you keep your database up? Obviously, you got a research team. But how do you keep it up to date? Because there's people move, because I saw one thing. Obviously, I've got a recruiting firm, so there's people that move company to company outside of a transaction, right? So you've got to track not only the companies that are being acquired and who's buying them and where they're going, but also you got to track the people. And so, how do you kind of boil the ocean to the extent that you can find and make sure that your data is as up to date as it possibly can? Because are you relying just on kind of LinkedIn confirmation to know that this CFO went from company A to company B? Like, how does that all work?
Yeah, we definitely not relying on any third party source. It's all our own internal research. It's look, if you build really good systems, processes, and teams, you stay on top of it, and we have systems and processes for that. Um, I think that's the big picture answer is you have systems and processes and teams, and you have goals of oldest possible data point within a particular data table that the team has to meet, and then you also have median age of certain update points in every data table, right? And so if you say like on average the contact information, the median is 7 to 9 days. That's kind of where we're at, depending on how weekends fall. But the oldest thing in there is also important, right? The median is important as an overall metric, but if there's something in there that's really old, that's still bad, right? And so we also track the oldest timestamp of anything updated. So for like address information, it might need to be like 30 or 45 days. I forget where we're at, but
Yeah, because things like that, like your address doesn't, like their physical address doesn't change, right? Typically, like unless
it doesn't change
or
much,
it changes often. Yeah,
but it changes. But when it changes, you need to know it, and it needs to be reflected in the database fairly quickly. And so, we certainly employ technology to help us keep updated, for sure. But we don't just AI scrape. It's just the quality is just not there. Not yet.
yeah. So let's kind of shift, because obviously, the world that you live in is M&A, right? And so you're and maybe confirm you're selling this not only to private equity firms but investment bankers. And I know I could actually use this as an executive recruiter, so that's something we need to talk about a little bit more. But how have you seen the kind of changes in the last, kind of, call it, even the last 5 years? So kind of pre-COVID to post-COVID,
Mm.
the M&A volume went super fast and super high in 21 and 22. It's kind of come back down in 23. Like, what are you kind of seeing? And I'm just kind of curious how you've seen kind of the last kind of 5-6 years
Yeah,
from
so
a transaction.
it's super interesting from our perspective because not only do we see the flow of information coming in and out of the database, we're also in constant conversation and pulse with our customers who are giving us a layered ancillary commentary on top of the data that we see. And so when we see the data, we can confirm with them is like, hey, are you guys generally seeing this in the marketplace? And understand why from their perspective. And then if you hear a lot of reasons why, some of them are outliers, but generally you find motifs in the feedback, in the ancillary feedback. And so you begin to build a story, and it's an interesting, you build the story on top of the data, and when they agree, it's real interesting. So what are we seeing? Well, certainly in 21, 22, there was a surge of M&A activity because there was a lot of money flying around. The Treasury and the Fed, well, the Fed printed money, and the Treasury issued debt, and that created a lot of money out there for acquisitions. And so we saw that. We saw both huge surge in investments from private equity firms, platforms and add-ons both, but also capital raises and just a lot of activity in the marketplace. Then 23, it started to slow down, and all the way through Q1, Q2, and largely Q3 of 24, it just fell off the cliff. And we saw that in our data. the ancillary commentary from our customers and people we talked to showed that as well. I bet you saw it in your business. There was just, it's not just private equity and mergers and acquisitions and investment banking firms. It's all the service providers to those industries, and it's all the companies out there. Everybody was slowing down. Because if you remember, let's say the summer of 24, there was legitimate talk about potential recession looming. Interest rates were still high. Inflation was still high. We had the elections coming up. There was just a lot of uncertainty in the overall market, and what we saw was a shift. Like, the private equity firms still have capital to deploy, right? They're going to deploy their capital, and so they're going to continue to make some acquisitions. But we saw was a significant shift from platform acquisitions to add-ons. The thesis was, look, if we have capital to deploy, but there's a lot of uncertainty. If we're going to deploy that capital and potentially make a mistake, let's make a small one, not a big one. And so we saw what was traditionally 2 platforms for every add-on acquisition, say, like, I don't know, from 2010 through 2020, something like that. For that decade, there would be like 2 to 1 platforms winning.
Yeah.
All the way to now, we're at parity. There's 1 platform for every add-on, or you could say it the other way, might make more sense. But so there's just a lot greater focus on doing add-on acquisitions, and we saw a shift to, if you recall, like in 2015 through say 2019, the story was private equity firms are moving down market, and so even platform investments were doing smaller and smaller deals. Well, then you had this surge of money from the stimulus, 21, 22, and we saw a shift to doing larger deals, because you got to deploy a lot of capital. You're going to do bigger deals, just like it is. More recently, we're seeing the shift back. And again, it's consistent with this thesis of, let's say, late 24 of, well, look, if we're going to make a mistake, make a small one, we'll do add-ons and smaller platforms. So you're clearly seeing that in the marketplace. Q1 this year, January, I think started a little bit slow for most people, but I think that was largely because just how the holidays fell. I don't know that people really came back to work until like the 6th or the 8th, something like that, just because of the way the weekends fell with the 1st and all.
Yeah.
But in February and March, I think across the board, everyone's seeing everything pick up.
And I guess as you kind of, there's a lot of things still going on in the global economic environment, and tariffs and inflation is still kind of relatively high, and there is still kind of the recession word floating around out there. From talking to the PE firms that have seen a little bit of an uptick, in February and March, as we record this on the last day of March, it feels like the people I talked to, Q1 was still below expectation. I think people thought maybe coming into 25, now that they knew who's going to be in the White House, there was going to be this flurry of activity, because 23 and 24 were relatively, low compared to like 21 and 22. What are you starting to hear, from the folks that you talk to in the M&A world about kind of 2025? Is it going to be a revert back to close to 21, 22 timeframe, or is this more of, this is just normal and it's not going to be, it's going to be better than 22, 23 or 23, 24, but not, gangbusters like 21?
I think most people say they have no idea.
It's always 2 quarters. We'll know in 2 quarters, like, because that's just the I don't know answer.
Summer, right? Yeah, it's crystal ball is very difficult, but certainly there are some things that are signals that inform us as to what the broader macroeconomic picture might look like. I mean, certainly when we have a national debt that we have, with an interest expense associated with it, with a higher interest rate, so all the new debt that we're issuing is at a higher interest rate than the debt we are retiring, and so our interest rate is going to continue to climb as a country. And like, if you just kind of do the back of the envelope math, even, and keep it simple, I mean, you can't raise taxes enough to balance the budget, and you can't cut spending enough to balance the budget. In fact, if you do both of those things, you can't do them both enough to combined to balance the budget. Mm-hmm. So you have to have, there's really 2 other things that are going to have to happen. We have to have economic growth, and in terms of GDP, and we'll have to print money. As much as I hate to say it, that's what we will do. We will deflate our debt through printing money. There's really no other solution. So printing money almost always creates inflation, is the main driver of inflation. So I think our expectation should be that as we print money, we will have continued inflation for a longer period of time than I think most people expect, above target.
And do you think that then gets us into a more steady state from an M&A specific activity
Yeah,
and from a
yeah. Taking it back to M&A, that's the unknown, right?
mm,
Um, you don't know. So for the longest time, let's say pre-COVID, the thesis was amongst investment bankers, eventually the baby boomers are going to retire, but dadgummit, they keep working, right? They just keep going and going and going. And so you have these people who founded a firm 30 years ago, 35 years ago. They're 70 years old, which in the past decades that they would have sold the company.
mm,
And they're like, I'm just going to keep running it because it's going great. And, uh, people are living longer, they feel healthier, young, as they age. And so I think that during 21, 22, we might have cleared out some of the bulge in the pipeline
okay.
that had been established, because the baby boomers, it was a big bulge in the pipeline. It's like everyone said, it's got to spit out at some point. It's got to happen. And I think a lot of that did happen in 21, 22. And so maybe we revert more back to normal, but whatever that means.
Yeah. And with the data, I'm curious kind of what types of businesses are transacting the most, and like I don't know how granular you like, can recall or know as far as like, hey, in the last year more services businesses like landscapers and HVAC companies have transacted more than SaaS or
Yeah.
you know
The, off the top of my head, I'm not going to remember. We could probably link to a couple of charts if you want to,
yeah, that'd be cool.
when you publish that. But we certainly do track that, and we do report on it in our blog. There are some macro things, and then there are some micro things. Including in micro things would be HVAC, right? It was hot
Hmm.
for a while, and it's less so now. And before that, it was like dental service organizations, and like it seems like we get these little micro niches that, not that HVAC is a micro niche, but it's not the broad macroeconomic uh, industry like manufacturing, right? But
Yeah,
you get these niches that, for whatever reason, the private equity firms will sort of all collectively gravitate to at the same time and focus on them. But generally speaking, software is going to be the hot one recently, just because of the scalability of it and the lack of capex required to scale things out. So
yeah.
margin businesses.
And then kind of pulling it back to talent, you obviously track people moving from one company to another. What do you see as maybe, and maybe this is another link that we can pull out, what do you see as the most kind of changed position post acquisition? I kind of have my theories, but I'm curious if your data would show something
Like
different.
at a portfolio company, you mean?
Yeah, yeah. So post acquisition, private equity comes in. What is typically the most changed or added type of position?
Well, there is one position that is by far the most changed, and there's a second one, and then there's the others. Right? The CFO is the changed position, right? Like 98 out of 100 times the CFO gets replaced. Or maybe there wasn't one, or
Right.
one that was maybe more of a controller than a CFO. So that position is almost always changed out, as you know. And then of course, depending on the CEO and or founder, if they exit, there might be a
Yeah.
transition, but
Yeah, that was my assessment. CFO is either added or changed. Typically, to your point, 99 out of 100 times as
yeah.
far as that
And
goes.
then
So
of course the CEO or founder, if they're exiting, they're exiting.
yeah,
Maybe there's a couple years tail there where there's some transition period, but that'll be a position. And then what you seem to find after that is CXOs. Sometimes depending on the size of the company, let's say 30 to 50 million, or maybe 20 to 40 million, somewhere in there, they may not have some of these roles that maybe a
hmm
$100 million company would have, enterprise value I'm talking about. So like the CMO and the COO and some of these other C-suite kind of positions that professionalize the organization.
yeah. Yeah, no, I think that's exactly right. It also depends on the industry that they're in. I've hired a lot of sales leaders because the go to market has maybe been floundering and all that fun stuff.
Yeah,
So,
yeah.
um, and so I guess as we kind of wind this down, because we could get more granular, but I think that may bore our audience, more data we talk
More than we
about.
already have.
That's exactly right. But I guess as we think about it, like, we're recording this, March 31st. If we were kind of to record in a year from now, like what do you think, and it's kind of two part, what do you think kind of happens in the M&A market over the next 12 months? And then what does private equity info look like 12 months from now? Like, what does the kind of success look like from a business standpoint? So kind of M&A and then company.
I'm always reluctant to give forecasts on M&A, right? Unless it's just broad macroeconomic things that I've already talked about. I mean, you never know. I mean, everyone likes to run 3, 5 year projections in their company and in the economy. And the reality is, I mean, no one ever projects a downswing. Everyone's like up into the right,
Right.
how we're going to grow. All projections seem to take into account that nothing goes wrong. No one projected COVID in their financials.
Right. Yeah.
So I don't know. You never know what's going to happen. But there is resiliency in the market, and private equity has professionalized itself and has become a class into of itself, and it's well formed, and there's a lot of resiliency there, and there's a lot of dry powder. Right? So
Yeah.
there's dry powder that you still have legs to run. So who knows what's going to happen in M&A? I just don't have insight into that. In terms of private equity info, look, we're doing a code release almost every week so far this quarter. We're adding tons of features and functionality to the database that make the product easier to use and more insightful, more interesting, better connecting relationships to people and firms in ways that aren't done elsewhere. And so super excited about what we have going on. But a year from now, it will be a much more powerful tool than it is today, for sure.
Awesome. Very cool. Well, I definitely need to unplug it a little bit or plug into it a little bit more because I know you and I've met a while ago, and
Yeah.
so I haven't had a chance to
We'll do
unpack
that.
it.
Yeah.
So as we kind of round this thing out, I've got to ask the three questions I ask every guest here. So first question is maybe share an influential book or podcast. I've even opened up the podcast that you would recommend to somebody listening.
I've read hundreds and hundreds of business books. So if we focus on business books, two really stand out. One written in the 80s and one written in the 90s, and yet the advice is still relevant. And so I'm looking at my bookshelf here because I keep them there. One of them is called Growing a Business by Paul Hawken. In fact, I'll just pull these out right now. If you hear a bang, I'm about to drop something. So here we go. Here we go. So the first business book it's Growing a Business, Paul Hawken. Fantastic book. Hopefully that's not mirror imaged in the video.
We'll link it anyway, so we're all good.
Yeah, I mean, just really fantastic writing and really great business leader. And then the second one that really influenced me, and in terms of the shaping corporate culture and all, is Ricardo Semler's book called Maverick. It's a great book. He's an unusual character and runs his business in very unusual ways, but it's very engaging to read. And then just on a personal note, I was in Stockholm, Sweden, on a flight back to the U.S. and I was just kind of looking for something to read. I'm in the airport bookstore, and I randomly I only had a few minutes. I grabbed this book called "Too Soon Old, Too Late Smart" by the late Gordon Livingston. The writing is just beautiful, and it's more about life, less about business. But it's one of my all-time favorite books.
Interesting. No, that's I hadn't heard of any of those, so I need to check them out for sure. Second question here: what's your favorite thing to do outside of work?
I play soccer in the neighborhood with the guys, and a couple times a week, I like to read. I have a personal blog called pastmidway.com, which I enjoy writing for, just for my own enjoyment.
Cool. We'll have to chat more about soccer. I grew up playing, so that's cool. Favorite vacation spot?
We're not good about taking vacations because, my wife is from Sweden, so we go there every summer. And so it doesn't really feel like a vacation when we're just going to visit family, but we enjoy it. So,
yeah, I saw in your bio that you spend the summers in Sweden. So I was like, I've got to pick your brain about that.
Well, when you live in Texas, as you and I do, spending the summers somewhere else is fantastic. It's just so hot.
Yeah. Yeah, no, that is, and I would imagine Sweden is much cooler and kind of less sweltering than Austin would be.
Yeah, it's, in the mid 50s to the mid 70s every day, and it doesn't get dark, which is kind of cool.
Oh, that's could be cool or really weird to not have it be dark. Yeah, that's fascinating.
It's important to get a good night's sleep.
Yeah, I would imagine. Awesome. Well, Andy, man, it's been cool to catch up and chat more about you and your business and what's going on in kind of the broader kind of M&A market. If people want to reach out and learn more about private equity info, learn more about you and what you're up to, or maybe they're a founder and they want to pick your brain about starting a business, what's the best way to connect with you?
Yeah, my email address is probably best. And you can put that in the bio or whatever.
Yeah.
Always happy to reach out, have people reach out to me. Love entrepreneurial conversations, talking shop. Happy to help anyone who's interested. And if anyone's interested in the product, we can also set you up with a demo and all. But very open and receptive to inbound communications.
Awesome. Andy, man, really appreciate the time.
Thank you.
I hope you found at least one actionable insight from this episode of the Growth Capital Podcast, your one-stop shop for insights from private equity leaders, CEOs, and startup entrepreneurs on starting, investing in, and scaling successful businesses, as well as the role having the right talent plays in growing a successful business. It would be greatly appreciated if you would rate and review this podcast. And if you're watching on YouTube, please like and subscribe and drop us a comment so we can expand the audience of this podcast. Thank you for all your support, and don't forget about upcoming episodes dropping every Tuesday.